Friends, very good morning and I welcome you all. So in our previous class, as you know, we have discussed some of the basic concepts of mutual fund. What are the various types of mutual fund and how actually mutual fund works? All these things we have discussed. Today, few more concepts relating to mutual fund we are going to discuss, and we are also trying to understand the difference between the mutual fund investment and the investment in equity sets. So let me share the screen with you right now. Yeah, hope you are able to see the screen right now. Now you see. What is mutual fund? You already know. It's a trust which pools money from like-minded stakeholders, and the stakeholders are given equity, given units. Unit, you would say, is a component of the total fund. And this is how exactly happens. This chart also we have understood in the previous class, that investors gives money to the mutual fund. Mutual fund invest in various securities depending upon the type of scheme. And this security generates some returns, and return is sent back to the investors. This is the process through which mutual fund works. Some specific features of the mutual fund we have already discussed. It deals with pooling of resources. The fund is managed professionally. And the ownership, that means the people who invest, they becomes the owner of the unit. They are not the owner of the fund, they're owner of the unit. And they have a share in the fund. And there is a concept of net asset value, or NAV. NAV is in fact the market value of the assets minus market value of the liabilities. That comes the net asset value. Net asset value per unit NAV is in fact the value of the units. So which some of the funds are there which helps in tax saving. So these are some of the features of the mutual fund we know. And these are the players of the mutual fund, you know, sponsors, trustees, AMC. Okay, then transfer agents, custodian. So this concept we have discussed. What is this AMC, or asset management company, we have discussed previous class. And I was also telling you about the various types of funds or various schemes. By structure, it can be open-ended scheme, closed-ended scheme, or interval scheme. By investment, it can be growth scheme, income scheme, balance scheme, money market scheme. And there can be special schemes like tax saving schemes, or maybe special schemes for some specific sector and for specific group of people. Like this, various kinds of funds can be there. At that time also, in the previous class we had discussed. So you can refer to a set of FAQ, frequently asked questions regarding mutual fund, released by SEBI, Security Exchange Board of India. So there are various types of fund, how mutual fund, all these things are explained. In the previous class, I had shown you that PDF, and I can show you that link also. I think it will be available here. Yeah, this is the link through which you can find out the SEBI FAQs and mutual fund. At the same time, to understand various types of fund, you can also visit to AMFI. Okay, Association of Mutual Funds of India, AMFI's website. You can also go to mutualfundsahihead.com. All these websites will help you, will guide you, will help you to understand the concept of mutual fund. Okay, these are the various types of fund schemes we have discussed. Right. Mutual fund has got a lot of advantages which we are well aware of. It is managed professionally. Diversification is possible. You can invest through mutual fund. You can invest various sectors, even if you are having limited money, but your money will be penetrated into various sectors. That kind of diversification is possible. It has got advantages of economies of search, economies of scale, money at a call. That means any time if you want, you can liquidate your money. Net asset value, you know, what is your value, you can find out at any point in time. You can go to the mutual funds website, or you can go to AMFI website also, you can find out anything. Okay, there are plenty of options are available in the mutual fund market. You can choose the scheme according to your choice. It's a very convenient way, and you can invest in various sectors where normally which are normally restricted to individuals, like investment in government securities, etc. One can also mimic the index. That means exactly in the proportion of index, Nifty or Sensex one can make investment. So these are various advantages. It is a very well regulated industry. So these are various advantages of mutual fund, which you are well aware of. There are still some disadvantages. As you know, there is no guarantee of return. Okay, money may be diverted. There are loading costs, entry load, exit load. This thing at that time when we join, administration costs, all these costs are there. Selection of right fund is also a challenge. There might be some unethical practice followed by fund. These are certain risks that are also involved. Mutual fund doesn't give any assured return. Okay. And few terms we need to understand. One is what is net asset value. This is highly relevant for us. When a person makes investment in mutual fund, it always wants that his NAV should grow. And what is NAV? NAV is the market value of assets of the scheme minus its liabilities. That is the NAV. NAV is more, that means value of your unit is more. Okay. So per unit NAV means the net asset value divided by number of units. Suppose in a scheme there are 1,000 units, right? The value of the NAV is 1 lakh. So 1 lakh divided by 1,000. So 100 rupees is the per unit NAV. If tomorrow it will become 101, that's a growth. So you should feel happy that if you want to liquidate at that point of time, you'll be getting 101. So at any point of time, one can liquidate. That is the advantage of mutual fund. Yeah, the performance of mutual fund is also evaluated on the basis of one more concept that is called as the total expenses ratio, or TER. If you previous class I had shown you the AMPU website. If you go there, you can find it out fund wise. What is that TER? That is the total expenses ratio. What happens, friends? Expenses reduces the profit. If expenses are more, profit will be less. Consequently, NAV will be less. So if a fund is managing with low expenses, that means it is more efficient than other funds. So you can compare TER of various funds. Okay. Similarly, one more concept is also important. That is an asset under management. What is the fund size? That also matters. Market value of the assets, or AUM. That data also you can get from AMPI's website. Let me do one thing. Even if I had shown it earlier, let me once again try to take you to AMPI website. Just give me a moment. Give me a moment. I'm trying to open the link. Yeah, I got it. Now I'll be able to say. Previous class I had shown you. Now again, you can go to, you can also go to the website mutualfundsahiya.com. You can go to SEBI website to find out its FAQ. You see, this is the ampindia.com's website. That is, Association of Mutual Funds of India. So here you see, you can go here, like here you see mutual fund schemes and their performances. You can see here is a link available. TER of mutual fund schemes. Okay, new fund and others. NAV data also you can find it out. Okay, if you go to investors corner here, you can acquire a lot of knowledge. What is expenses ratio, types of mutual fund scheme, risk in mutual fund. So I expect all of you to visit this site and update your knowledge. Okay, friends, will you be doing it?
Yes, sir.
Again, one more page, you see Investor Center. You can learn many things. how to invest in mutual fund, all of us. And all of these things has got lot of practical importance. So I suggest you must visit. I just showed you the way where you can go, but I think you yourself will be able to manage with that. Yeah, few more concept, basic concept like what is sale price in a mutual related to mutual fund, what is repurchase price, what is redemption price, will be understanding. Sale price means price you pay when you invest in the scheme. That is also called as offer price. It includes sales load. Sales load means if some commission, some expenses are charged at the time of joining the scheme. That is called as sales load or entry load. It includes that. That is called as sale price. Repurchase price. Repurchase price means price at which it will be repurchased as by mutual fund. That means when you are selling, you are disposing of or you are liquidating your unit, how much you will get, how you will be getting, that is repurchase price. Such prices are NAV related. Okay, it is very closely related to NAV. Redemption price. Redemption price, if it is a closed-ended fund, you are going to redeem the price at which you are going to redeem. That is called as the redemption price. What is sales load? Sales load, if the commissions or administration expenses collected at the time of sale. That is also called as the front end load. That means upfront. When you are joining, that money is collected. What is repurchase load or back end load? That means it's the money collected when the units are repurchased. That means when you are liquidating as an investor, how much charges you are paying, that is called as the back end. Okay. And various types of mutual fund schemes are there. You already have discussed. There is one more type of mutual fund which is called as MMF or money market mutual funds. These are in fact open-ended scheme for short-term duration. The average maturity period is 1 year. Therefore, they are called as the money market mutual fund. Okay, they are helpful for managing short-term cash needs. And by this time, we must have understood the risk associated with the mutual fund is relatively less than the risk associated with investment in stock market. Right? Because mutual fund is well diversified. And diversification reduces risk. Right. So when your investment is spread over large number of investment vehicles, large number of investment instrument, the loss also gets balanced. There might be some sectors, some companies where value may not be rising, but other companies value price might be rising, so it gets balanced out. Therefore, risk is minimized in case of mutual fund. So, and now if you technically try to differentiate between mutual fund and stock market investment, here are certain list of issues. On that basis, we'll be able to differentiate. First is, you see, form of investment. When you invest in shares, it's a direct investment. You are deciding where you are making investment. But coming to mutual fund, it is an indirect way of investment. You are not selecting what are the exactly instruments on which investment is made. It is the asset management company who is deciding. Mutual fund is deciding. So it is an indirect way of investing. And shares, okay, at one point of time, you can purchase only one share. But when you're investing money in a mutual fund, your portfolio is well diversified. Okay, so you can, even if you're making single investment, but that is spread over various sectors of various companies. Right. And objective of share is that it's a part of company's growth strategy. That means you become, as an investor, you also become a part of company's growth strategy. If the company is planning to grow, then your shares value will grow, your wealth will grow. But mutual fund, it is an investment option of an individual. You plan out your own scheme. You decide. Okay. Then control over investment. So in case of stock market investment, you are directly responsible for the choices of stocks. And in case of mutual fund, in fact, it's a predetermined portfolio of stock. You know, if this is the scheme, this money is going to be invested in these sectors or in this type of stocks. So you have you have, in fact, already it has been decided and you are participating in that. So you are not directly responsible for choices. Next issue is that about fixed investment. There is no option for fixed investment as prices fluctuate regularly. So you cannot say that I will invest this much of money, or if you want to buy these shares at this price, that meaning you have to buy the things, you have to make investment at the market price. But under mutual fund, you can decide a fixed amount and regularly you can keep on investing through this scheme, which is called as the SIP or systematic investment. You can invest in fixed monthly systematic investment. Brokerage and under stock investment, brokerage charges and transaction fees are charged. But when you're investing in mutual fund, then fund management charges, front-end loads, back-end loads, early redemption charges, these charges are levied. Stock market can give you quick return, but mutual fund can give you return only when you invest for long term, because initially there will be some cost of managing the fund that will be charged to you. After that, only fund will start growing. Normally, if you see the average return of Indian stock market, maybe it may be around 14 to 16%, sometimes it goes to 19%. If you take the long-term return, maybe around 15 to 20 years, average that kind of return will become. Average return of mutual fund comes around 8%. Okay, risk is less, so return will be relatively less. Stock market is highly risky. People who have some expertise in the stock market, normally they participate in the stock market. But people who are new to the investment sector, they generally prefer to mutual fund sector. Stock market is risky investment and mutual fund is relatively less risky. So friends, these are the differences between mutual fund and the stock market investment. Hope it is clear to you. SEBI FAQs, you can see it through this link. And what are the functions of AMC, etc. We'll be not covering all these things. I think we got a fair idea about, overall idea about mutual fund. Is it clear to you?
Yes, sir.
Any query you have about mutual fund?
No, sir.
Okay. Thank you very much.